Hey, good afternoon, everyone. Thanks for joining Isaiah Porter and the team at Foundations Investment Advisors. This is Market Talk on a Wednesday. Usually we're doing Market Talk Monday. And
It always seems to find its way on a Wednesday.
yeah, we get it booked and then appointments go over. I get long-winded, I'll take the hit. It's on me.
Chapel was up till midnight last night.
Well,
his little thing.
that's what babies do.
Mm-hmm.
So you got a few more years of that, so hold on.
Yep.
But as it relates to the market and weekend review back to February 20th, Darren and your team at Foundations bring us up to speed with some things that are going on and how it relates to our clients' portfolios.
Yeah. Last
today.
week we had a shortened week. It was a holiday week. So a shortened trading week. But we saw the S&P 500 climb up to 1.1%, the NASDAQ climb 1.5%, the Dow up 0.3%, and the Russell leading with the small caps at 0.7%. But emerging markets ETF broke out to all-time highs, and international volumes were lighter due to Lunar New Year and Ramadan.
So some other things that's happened in the news, a couple of big geopolitical issues. Number one,
Supreme Court ruled against many of Trump's tariffs.
Yeah, so there's about $170 billion that we've collected since the beginning of the year.
And they're still trying to figure out if we have to repay that back or not.
Right. That's just absurd. But what's crazy, folks, is that if we go back 113 plus years, when income tax was instituted October 3rd of 1913, there was no income tax in our country.
Before 1913, it was tariffs.
It was tariffs and luxury taxes on things like lights and telephones.
Yep.
And if you were wealthy, you paid a luxury tax on those because not everybody had the benefit of having it. So I'm a little disappointed in the Supreme Court ruling, but I think the administration, through the Treasury, they have other tools to still manage tariffs on countries that don't play fair.
Yeah.
So
that'd be an interesting thing to go back to if like a luxury tax on cars and everything that you have today.
Yeah.
Kind of interesting.
You think old horse and carriage, and they're like, oh, if you want one of those Motor T cars that Henry Ford makes, then you're going to have to pay a little luxury tax on that.
Yeah.
For that combustible engine. So, where we are right now is these tariffs. There's a potential for those to cost the federal government the money that it's collected, which, again, creates a deficit.
Yep.
Or a deeper hole in the deficit than what we're currently at. But I think on that front, there's a potential from everything I've read and listening to both sides of the aisle, there's opportunities for the Republican cabinet to manipulate some other tariff rules that could kind of offset these issues. So more to come on that. We'll keep a close eye on that. What effect that has on portfolios is, still to be seen. But a thing I think that can affect portfolios, Isaiah, is what's going on in Iran and the U.S. We've got them in a 10 to 15-day window of saying, hey, you've got to negotiate with us and come to the table. You got to get rid of your nuclear capabilities. And if you don't do that, then we're going to come turn your town into a glass factory.
Yeah, and I think the thing that's kind of holding that in limbo and like a strike or not is there's a lot of military officials in President Trump's cabinet that are advising him on the strikes. And from what I've read, in articles I've read, what Trump wants to do is do a decisive strike, just like we did back in when we did the strike on Iran, early or late 2025, I think, right? Mm-hmm. So we struck them, and it was pretty decisive to where there really wasn't a huge retaliation. Yeah, they shot some Shaheed.
When it was nothing burger.
Yeah, Shaheed drones into Israel. But that's what the military officials are kind of worried about now is what do we decisively strike now to make them come back to the bargaining table without having a wider spread war.
Nobody wants that. Nobody wants a war that is infectious into the other Middle East region. We've got enough of the Middle East on our side right now to be effective in where we're parking equipment, to strategic alliances that we have with the Saudis, to the Emirates.
Yep.
So my guess, non-financial advice here, just my personal opinion. I think there's an imminent attack coming. I think the U.S. When you go look at a lot of the betting sites, it's like 68, 69%.
We have a lot of assets over there right now.
Yeah.
We have the most assets over there since the beginning of GWAT.
Yeah.
So that's a lot of air. That's a lot of air. And you got to look at what Iran's doing too. They're in the deal of getting a supersonic missile from China to be able to sink, or have the capability to try to sink one of our warships.
Well, when you have a country leadership say that they want the infidels dead, you got to take them serious. And so I think that's something that we just got to deal with. And between that and tariffs, and then some of the other notes that your team foundations made was on the global levies under a couple of trade acts of 1974. The Trump administration is already moving to put those in place, but it seems like it could cause some issuance of treasuries. So we need to be watching those treasuries, and to be watching the stock markets. But as we always say, diversification is key.
Yep.
And if you're looking for income strategies in your retirement phase, and income is the outcome, you need to pay attention to these kind of macro issues and make sure that your plan is correlated to your money belief. And if your money belief is wrapped into global economic events, it may be something we want to talk about. And what changes need to be made in the portfolio to make sure we're not exposed to too much risk to your income.
Another thing the team's pointed out, and we've been keeping a key eye on, is hotter inflation, which I know a lot of people are looking for rate cuts, but with hotter inflation, it looks like rate cuts are less likely because of inflation rising.
Yeah.
So really waiting on the next Fed to come down and say what his agenda is, what he wants to do, and where rates are going to go.
Fed chairman. Yep. Okay. Economic calendar coming up.
Yep.
Any big thing that we need to be paying attention to there?
Let me look back through my notes.
So home building, home starts, building permits, new home sales, those all seem to have performed well and topped estimates. So that's a good sign that economy seems to be moving in the right direction. And I know it's a bit of a slow roll, and I think some of these geopolitical issues can keep money on the sidelines. So the sooner we can get clarity on those, markets like known knowns. And so if we can create that environment of those known knowns in some of our geopolitical arena.
Markets do like known knowns, and you can see even all the way back to the U.S.-Iran tensions, you can see oil's up 5.8%.
Yeah.
As tensions rise, gold's up about $33 an ounce. So it's sitting last week, it closed about $5,079. Silver's back up 5.7%. Copper slightly higher. Bitcoin's just been taking it on the chin recently.
Yeah.
Falling. But the U.S. dollar index is up 1%.
So, again, bringing it back to the big picture for you personally, if there are any questions you have on your portfolio, reach out to Isaiah and the team at Foundations. You can reach them through our firm. You can reach out to us, 757-955-8071.
Yep.
Or ip@kennethporterandcompany.com.
Absolutely.
Or kennethporterandco.com. Or team@kennethporterandco.com. And then the next thing that we can do is hit the like button and the subscribe button on your computer and support us in keeping up with this content.
Yeah, absolutely.
We appreciate you guys. We love you. We'll see you next week.
Yep.
All right. Take care.
Oh, no.
No.
We'll be out of office
next week. We'll be at Momentum Conference in Las Vegas. So maybe we'll do a special edition from there that we'll record.
Yeah.
See if we can, maybe we can do that.
Squeeze
All right.
All right, sounds good.
See you guys soon.